So this is not actually a break of structure. This is where we actually have the ideal break of structure. This is just price taking out this swing low, not yet establishing a valid lower low. This is where we have a valid lower low that have been broken. This is not a valid lower low because we do not have inducement created before the break of the structure, and then this return to raid the inducement. So this is actually the inducement, and then price fell, took out this low. So we are expecting to see that since price created this low point, to actually validate this low point, we want to see price push to the upside and raid the inducement. So you can see we have a minor inducement and then we have a major inducement. This is the ideal high point that sponsored this movement, because you can see this pullback is still within this range, this high and this low. So this is a minor inducement. Now price gave. So let's check out the bearish market condition, how you can actually mark out ideal institutional market structure in a bearish market condition. So let's look at this valid structure identification. So now what you can see is that price created the low point here, and then we have the push of price to the upside. Price created this high point. Now we have price push to the downside. So you can see this is actually a minor structure within the impulsive leg move. So price is being drawn to this sell side liquidity, the external range liquidity. So what you're going to see is that price is actually going to create a buy side liquidity, so that when price takes out the sell side liquidity, the newly created low would aim for the buy side liquidity to actually raid the buy side liquidity before we have the continuation to the downside. And basically, you would see that above the buy side liquidity, we're going to actually see a sponsorship candle, the order block, or you're going to identify a fair value gap, or it's going to be within the PD array that you actually need, the premium and discount PD array. So, and then you now see that price would what? Continue in the directional bias. So now you can see that now price took out this buy side liquidity, the inducement. So this validates this as a lower low, and now price created the lower high. And then we have the impulsive move to the downside that took out this external range liquidity. So you can see in the condition where we have an invalid structure, price created a low, created the high. Now we have the push of price to the downside, price took out the external range liquidity. So we want to actually see price takes out the internal range liquidity to validate this newly created low as a lower low. Well, now you can see that price pushed to the upside, but then we do not have price returning to actually take out the inducement, the buy side liquidity. Price took out the sell side liquidity. Price did not return to take out the buy side liquidity. Now, this basically is trying to make us understand that this is not yet a valid swing low point. So now, basically, the impulsive leg move is actually from this swing high to this swing low. So until we have the push of price to the upside to raid this buy side liquidity, then we validate this as a lower low point. So this is how you actually want to identify structure. So let's look at the concept of the major and minor inducements also in the bearish market condition. So you can see we have the impulsive leg move, which basically you can identify it in the other diagram here. So price pulled back and then took out the buy side liquidity, which is actually the inducement. So basically this is the entire leg move in a higher time frame. This is what you're going to see. But this is actually the structure within the lower time frame. So this is actually a minor market structure. Price took out the buy side liquidity inducement, and then we have the fall of price to the downside. Price took out the external range liquidity. So what you can see is within the impulsive leg move, we have this minor market structure. Now what we can see is price fell to the downside, took out this low point, price pullback. Price fell to the downside, took out this low point, price pullback, created this low. And then this low sponsored the impulsive move, the last impulsive move that took out the external range liquidity. So this becomes our major inducement. We were looking forward to see that price will return, take out the inducement, and then validate this as a newly created low point, and then price continues to the downside. So we can see what actually validates this as a major inducement is because we can see that price fell, took out structure, price pullback, fell, took out structure. So price pullback. So this is actually minor structure, which we can identify here. The impulsive, the pullback, the impulsive, the pullback, and then the fall that took out the external range liquidity. So this is now where we now actually look at to identify the minor inducements. we have the impulsive leg move, which we can identify here. Price gave us pullback. This is actually minor structure. So in a higher time frame, you're going to see the movement as this. So now price fell to the downside, took out this low. Price pulled back, price fell, but price failed to actually take out this low. Meaning this high point is responsible for the movement to the downside that took out the external range liquidity. So any form of pullback within this swing low and high is actually a minor inducement. So now this is now the minor inducement. So price will target the minor inducement and possibly aim for the major inducement. So that is why you can see condition where you could actually mark out this as the buy side liquidity you're looking forward to see price rate. But then price would also rate this and in extension rate this. So this is actually the major and this is actually the minor. Because you can see that this pullback is within this price range. So you can see we have the pullback, impulsive, pullback, impulsive, but then failed to break this swing low that created this swing high point that took out this internal range liquidity, this inducement within the minor structure. Now price failed to break this. Now we had this pullback. So this is the minor inducement and this is the major inducement. So how then do you properly identify structure within a bearish market condition? So now we can see that the market gave the impulsive leg move. Within the impulsive leg move, price created the inducement, which is the buy side liquidity. So you can see price created this low. The low pushed back and then took out the buy side liquidity. So this validates this low point. And now you can see price fell to the downside, creating the inducement, the buy side liquidity. Now, to validate this as a lower low point, you want to see price return and rate the internal range liquidity, which is now the buy side liquidity or what you can call the inducement. So now we have price created this lower high points. And now we have the impulsive leg move that took out the external range liquidity. So we want to see price pull back to aim for internal range liquidity, fill up inefficiencies. Now we can see price push back, took out the internal buy side liquidity, the inducements. Price created the impulsive leg move, took out the external range liquidity. So we want to see the newly created low, push back and take out internal range liquidity to validate this as a lower low. So you can see how in this case here, price pushed back to the downside, took out this low, price pushed to the upside, pushed back to the downside, took out this low. Now you can see how price created relatively equal lows and equal highs. Now price pullback. This is actually the ideal swing to consider because you can see that this movement here and this last high point did not push to the downside to take out this swing low points. Yes, we have this movement to cut this relatively equal high, but this is actually the valid buy side liquidity, the inducement that the market will be aiming to actually rate. And now we can see the pullback took out the inducement, which is the buy side liquidity, fell to the downside, took out the sell side liquidity, which is now our external range liquidity. So basically, this is just how to identify structure. We're going to look at real-time chart example so that you can actually see this. So guys, we're going to look at this real-time chart example on how to actually identify ideal institutional market structure. For you to actually master this art, you would really need to backtest your chart after this episode. Go back to the chart and then look at what you've learned and then try to apply them in the chart, see them through the charts, and then mark out structure for yourself. By doing this, you'll be able to master how to identify ideal institutional market structure. In coming episode, we're going to look at real-time chart replay so that we can mark the structure as price is being delivered. But for now, we are going to stay with this established market structure. And I'm going to explain it to you guys so that you will understand the ideology behind price delivery. So now what we can see is that we have this impulsive leg move to the downside. And what we can see, we have this pullback to the upside. Price created the inducement before this fall. What you can see is price created the swing low. Price aimed for the inducement, which is the buy side liquidity. Because we can see slightly above this high point, we have the fair value gap. So the reason that we have this fair value gap would actually make price be attracted to this fair value gap. So price, you can see, raided the buy side liquidity, which is the inducements. So you can see that this corrective leg move, took out this swing high point, and then we have the impulsive leg move to the downside that took out this low point. So this is a valid low point, and this is a valid break of structure because you can see this candle body closed below this swing low. This is a valid low because this took out buy side liquidity, mitigated the fair value gap. Then we have the impulsive drop to the downside. Now what we're going to see is that we have the pullback of price to the upside, and then price fell to the downside. So this is actually our major inducements, because what you're going to see is that price fell to the downside. This is the pullback leg move after the break of structure. We do not have a pullback leg move before the break of structure. We have that after the break of structure. So once price created this low, price pulled back, price dropped, price did not break this swing low. What we can see is that now price created another pullback within this range, this high and this low. So you can now see this is a minor inducement, because what you're going to see is that this is actually the ideal high point that sponsored this movement to the downside that took out this low point. So this is not actually a break of structure. This is where we actually have the ideal break of structure. This is just price taking out this swing low, not yet establishing a valid lower low. This is where we have a valid lower low that have been broken. This is not a valid lower low because we do not have inducement created before the break of the structure, and then this return to raid the inducements. So this is actually the inducement, and then price fell, took out this low. So we're expecting to see that since price created this low points, to actually validate this low point, we want to see price push to the upside and raid the inducements. So you can see we have a minor inducement and then we have a major inducement. This is the ideal high points that sponsored this movement, because you can see this pullback is still within this range, this high and this low. So this is a minor inducement. Now price gave us this low. This is a valid low because you can see price sponsored the movement and then took out the minor inducement and took out the major inducement. How we can see that price took out the major inducement is because we can see there's still valid fair value gap above this major inducement. And you can see that the major inducement gave us relatively equal high points. So now you can see price took out the minor inducements, returned to the downside, failed to break this swing low. Price pushed further to the upside and then took out the major inducements. So what you're going to see that since price did not create an inducement before this break of structure, you're going to see that price pulled back into inefficiency in confluence with a premium or equilibrium price level. So we can see that price pulled back to the 50%, and you can see we have this fair value gap within that equilibrium level. Price filled the fair value gap, fall to the downside. Now you can see that now when we expand this to the newly created low points that price created, now you can see price pull back into premium price level, and we have inefficiency there, and then price took out the major inducement and fell to the downside. So due to the valid price inefficiency, we have the fair value gap. We can see that now price further push to take out the major inducements. So in a bearish market condition, you'll be looking to sell from a premium price level. So now we can see that now price took out the major inducement, and then we have the fall of price to the downside, and here we have a break of structure. So this is a valid lower low because this took out minor inducement, took out major inducements. So now we have price created the high, we have the drop of price to the downside, price broke structure to the downside. This is a valid break of structure because we can see candle body close below this swing low. Now we can see that before price took out this swing low, price created this pullback. This is a valid pullback because you can see that this is the lowest candle price created. Price pullback, took out this candle high points, took out this candle high points, took out this candle high points, mitigated this fair value gap, and then fell. So we have these as our major inducements because we can see we have a range this high to this low. This is a minor inducement because it is within this high and this low, even though this high point sponsored the movement to the downside that took out this low. So this is not a breakout structure. This is where we actually have our breakout structure, because this is the valid lower low points. So we are looking forward to see that price will pull back and take out the minor inducement and possibly also the major inducement for price to mitigate this other block. But then what we can see is that now price created a new low point, price pull back to cut this inducement. So what you're going to see is that the minor inducement pushed price to the downside, took out this low. Price now created another pullback and fell to the downside, took out the low price created, creating a new low point. Now, this is the lower low that sponsored the movement to the upside that took out this newly created inducement. So you can see how the inducement was transferred. We have the major, the minor, price created a new inducement. Now, price took out the newly created inducement, neglected the minor inducement. And now we can see that price fell to the downside. So this is a valid low point because why? This took out buy side liquidity, took out the inducements. Now we have the fall of price to the downside, and then we have a breakout structure. But this is not the candle that validates this breakout structure. This is actually the candle that validates this breakout structure, because you can see this candle body close below this candle low and also the swing low. So that is why you can see I'm indicating that this candle actually validates this breakout structure. So meaning this is the entire impulsive leg move to the downside. And now we have the pullback. Price to cut this high point. So we have the pullback to the upside. Now we can see this is now the inducement price created. And then we have the fall of price to the downside. So this is now our valid low points. This is not a low point because this candle did not close below the swing low. This is the candle that sponsored the ideal break of the structure. So this is not a pullback to consider as the inducement, because this is actually the candle that validates this break of structure. This candle body did not close below the swing low. So this is now our pullback as the inducement. Price created the low. Now we can see that price pushed to the upside and then took out the inducement. Now you can see when price took out the inducement, reacting at this fair value, that we can see price fell a little. But what we are going to see, the market will do whatever the market wants to do. We have an unrated minor inducement. So what you're going to see is that now price aimed for the minor inducement. So price took out this minor inducement before falling to the downside. So the market would actually do whatever the market wants to do. So meaning now we have this as the entire impulsive leg move from this swing high to this low point. So this is the entire impulsive leg move. And then this is now the pullback, since this actually took out this lower high points. So we have these now as the lower high. That is why you can see I used a different color to identify this high points. So the market will do whatever it wants to do. The market took out this ideal inducement, but then price aimed for this other buy side liquidity that was not rated, the minor inducement that was created after the break of this low point. So now you can see price took out this buy side liquidity. The minor inducement took out this ideal inducement that was created after the break of this structure. Now you can see we have the fall of price to the downside. So this is a valid lower low because it took out buy side liquidity, took out inducements. So I told you the market will actually aim for external range liquidity, return to take out internal range liquidity, fill up what's inefficiency. Now you can see we have the fall of price to the downside. We have price created this pullback. We have the inducements. Price further fell. Price created this pullback. This is the inducement. Price fell. Now we have the breakout structure. So this is a valid breakout structure because you can see we have this candle body closing below this swing low. So the first inducement was created here because this is the first pullback before the impulsive move. But then price did not break the swing low. Price created another pullback. So we have a transfer of inducement from this swing high to this swing high. So don't forget, this is actually the impulsive leg move. So when you go to a higher time frame like the daily time frame, what you're going to see is the impulsive move to the downside. So now what we're going to see, we have transfer of inducement from this high to this high. Now price fell, broke the structure. Now we have another pullback here. So you can see now we have this pullback to the upside. Price created this inducement and price fell, took out this low. This is not where we actually identify and establish our breaker structure. This is our valid breaker structure because this is not a valid low point. We don't have a push of price to the upside that took out these inducements. So price fell to the downside. Price created this low. So this is where we have a valid low because this sponsored the movement to the upside that took out the inducements. Price created the lower high. And now we have the fall of price to the downside. We have a valid break of structure here because we can see that this candle body closed below the swing low. So basically, you can see that we have this impulsive leg move from this high to this low, and this is the pullback. These are not structures to be considered. These are just minor structures. This is the entire impulsive leg move from this high to this low, and this is the pullback. So understanding that market will take out internal range liquidity helps you to understand when a market actually is in a reversal condition. If you don't understand that the market will take out internal range liquidity, you would consider the break of this high as a reversal, which is actually wrong. So now you can see price fell, took out the swing low. Now we have, this is the pullback after price took out the swing low. We do not have a pullback before the read of the swing low. We have pullback created after price took out the swing low. So we can see price returned, feel this inefficiency, reacted at this other flow, and we can see price fell. This is our inducement. Now price fell to the downside. This is not where we actually have the ideal breaker structure because this low is not a valid low. There is no inducement created here where price actually returned to raid the inducement, the buy side liquidity. Price fell to the downside. Now price gave us this pullback. Price fell again to the downside. So we have the inducement was transferred from this high to this high. Now we have the fall. This is not a valid low because this did not push to the upside to raid the buy side liquidity before falling, so that we can validate this as the ideal lower low. This is still our lower low, meaning this is just the impulsive leg move price is created. So now we can see that now price broke this, we have pullback, this is our inducement, price fell. Now this is our valid low because this answered the move to the upside that took out this buy side liquidity, took out the inducement, reacted at this fair value gap before the fall to the downside. So meaning this is actually our impulsive leg move from this high to this low, and this is the valid pullback. Now we have price fell to the downside, took out this swing low points. So what you can see is that price created the inducements. This is actually the inducement because you can see this is the last sell move and price pulled back, took out the high points. So when we treat valid institutional pullback, you're going to understand how to identify valid institutional pullback. So price took out this candle high, and then we can see this as the inducement. So meaning this is the fall, the pullback, the fall. So price is going to aim to actually take out the inducement. So that is why you can see when price return fueled this inefficiency, price further went for the inducement, the buy side liquidity, and you can see reaction. Price fell. But then we still have price continue to the upside. And then here we have a bullish market structure shift.